Hello and welcome to the Market Review, where we bring you key developments in the financial and capital markets as it affects the economy. Today, we'll be reviewing first quarter 2022 Nigerian Capital Market Activities. And my guest is Mr. Johnson Chukwu, Group Managing Director, Cowry Asset Management. It's great to have you once again on the program, Mr. Johnson Chukwu.
Thank you for having me. Good morning.
Good morning. Good morning. Before we begin this conversation, let us take a recap of market stories from last week. The Securities and Exchange Commission issued proposed rules and registrations of virtual asset providers and issuance of digital assets. Also last week, United Capital held its 2022 annual general meeting at Transcorp Hilton, Abuja, where it approved a record-breaking dividend payout of up to 1.50 Naira for every 50 kobo ordinary share. Also last week, Singapore-based commodity trader Olam Group said it plans to sell a 35% stake in unit Olam Agri to Saudi Agricultural and Livestock Limited Company for $1.24 billion, paving the way for an IPO and demerger of the units. We go on a break, and when we return, the conversation will continue.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content, watch Web TV. Same news, different perspective.
Welcome back, and if you're joining us, it is the Market Review, and we're discussing the first quarter of 2022 Nigerian Capital Market Activities, and my guest is Mr. Johnson Chukwu, Group Managing Director, Cowry Asset Management. Mr. Johnson, let's look at last quarter. Now, if you take an insight into the global and macroeconomic developments on the capital market, it kickstarted with the Russia aggression in Ukraine, which affected global energy prices and affected operations of companies, most of them listed in the Nigeria Exchange Limited. We've seen rising inflation also in this quarter, currently at 15.7%. Capital importation report that came out showed that out of the $6.7 billion that came in, FPIs, which concerns the market, foreign portfolio investment accounted for 50.52%, taking the lead. And of course, the interest rate retention by the Central Bank of Nigeria, which is currently 11.5%. Out of these developments, which of them did you see have real impact on the market?
Okay, thank you once again for having me. I think the market had to absorb part of the changes or the developments in the global economy. Like you rightly pointed out, when Russia invaded Ukraine on 24th of February, some people felt that the Nigerian market would be insulated. But after a few days, the impact of the rollback on economic activities in Western economies as a result of imposition of sanctions on China and Russia began to impact on the Nigerian market. We saw situations where foreign portfolio investors, though they had actually thinned out, clearly they began to move away from emerging markets. But beyond that, a lot of other factors came into play in the first quarter of the year. We saw the Federal Reserve Bank increase interest rate by 25 basis points. The Bank of England similarly increased interest rate by 25 basis points. Of course, this we are all expected that will happen in the first quarter of the year. Yeah. As a result of the uptick in inflation rate in America, American inflation had gone to 7.9%, the highest in over 40 years. So it was clear that the Federal Reserve Bank was going to adopt a contractionary monetary policy or reverse the expansionary monetary policy that implemented since COVID-19. So all these factors had a direct impact on the Nigerian capital market. Initially, at the beginning of the year, we saw market buoyancy, market activity that we are on the positive side. We saw the bulls, we are overrunning the bears in the early part of the quarter. And then as we are moving towards the benefits season, that strengthened. But when the effects of the war in Russia and Ukraine began to get into the nation, into the economy. We saw a slowdown in market activity. We saw a reversal of market trend. The market became a bit bearish. So these factors all contributed. And at the local level, some of the endogenous factors, you saw interest inflation rate move to 15.7% for the month of February. And this all have direct impact. We also know that the economy is going through some serious FX scarcity. We've seen a depreciation in the local currency. We've seen a situation where, in spite of the increase in crude price above $100, the Nigerian foreign exchange reserve is still depleting because we're not able to produce enough crude. All these factors surmised in what we saw in the equities market and the fixed income space in Nigeria in the first quarter of this year.
Yeah, very, very, very good insight into what happened and how it's affecting the market, starting very well, and then towards the end of the quarter, the impacts of the Russia aggression is now weighing in, and we're seeing a bearish performance. But when you look at the corporate performance and the sectors, how has that really affected the market, and which sectors have been really affected from your assessment?
Well, if you look at the sectors, you realize that one of the most vibrant sectors, among the most vibrant sectors here, are the industrial goods sector, where the cement industry operators are playing. You also see some level of performing beyond the economy in the financial services sector. We've seen the big banks give good profit returns and good dividend payment. Granted, in terms of earnings and in terms of profit, some of them did not record substantial change or improvement in their profit level. But somehow they were able to stay above the water. They still made profits that were better than the previous year's profits. So I think in terms of the sector, they were able to, we can call the bellwethers, the financial services sector, particularly the banking industry, and then the industrial goods, particularly the cement manufacturers, were the bellwethers of the economy in the first quarter of the year.
Industrial goods and, of course, the financial services, zooming on the banking. Hope others pick up into the second quarter. But when we look at the second quarter, let's just take them one after the other very quickly. The Securities and Exchange Commission will hold its first CMC meeting. What do you expect as we get into the second quarter, the outlook? How should that meeting shape the direction for market activities as the apex regulator of the market meets with all other stakeholders?
I want to believe that the meeting will largely focus on advancing the market development initiative of the SEC, Securities and Exchange Commission, and also communicating in more depth the vision of the new Director General of Securities and Exchange Commission as it relates to market development, as it relates to improving the integrity of the market operators. The SEC has come up with some new initiatives to further strengthen market integrity, and among those things are asking fund managers to move funds under their management to custodians. They've also come up with stringent position on some of the Ponzi schemes and unregistered market operators. Yeah. So I want to believe that that meeting will largely dwell on these things and ensure that we develop a more robust approach to dealing with some of these challenges.
Definitely. Ponzi scheme operators will definitely have to watch out, because it's no longer business as usual as we expect more access from the regulator as they continue to unfold those who are scheming the market. What about the Multi-Policy Committee meeting? Of course, we expect the Central Bank of Nigeria to have its meeting during the second quarter, and there's possibility of a hike in interest rate. How would that impact the market?
You see, the reality of the Nigeria situation is that the Central Bank is dealing with very concentric opposing forces. If you look at the factors, the macroeconomic environment, you observe that the recovery we've seen in the economy in terms of economic growth rate is still very fragile. And we've also seen a tapering of that economic recovery. If you cast your mind back, in the second quarter of last year, the economy grew by 5.01%. third quarter, it grew at a reduced rate of 4.03%, only to grow at 3.98% in the fourth quarter. So that's a declining growth rate. And when we see the first quarter of this year, by that time, they would have seen the first quarter of this year. And I want to believe that we're still going to see a further deceleration in growth rate. At the same time, you are seeing inflationary pressure, which ordinarily, inflationary pressure should ordinarily recommend for the Monetary Policy Committee to adopt some contractionary measures. On the converse, the decelerating growth rate in the GDP will now will recommend for the National Monetary Policy Committee members to adopt an expansionary policy. So you are dealing with high rate of inflation and a slowing economic recovery rate. So in that situation, I want to believe that the Monetary Policy Committee members will be hard pressed to retain existing policies, policy rules or policy rates. Because if they adjust any of these policy rates, they run the risk of either pushing back the economy into a recession or increasing the rate of inflation, which we're also already dealing with. Again, you also have to contend with the fact we're seeing a lot of FX pressure. Any form of expansion will pump liquidity into the economy and put further pressure on the FX regime. So I think my take is that the Monetary Policy Committee member, particularly the Central Bank, will continue to adopt unorthodox tools to manage liquidity and hope that that will help us tame inflation. Part of the inflationary pressure we're facing is structural, and you can't run away from it. Look at the price of energy prices. We've seen an increase in price of electricity tariff. We've seen a major uptick in the price of fuel and other fossil fuel products. Yeah. And this will certainly flush into the inflationary figure in the month of March. So you can't run away from that. And I don't think any contractionary monetary policy will arrest such structural challenges in an economy.
Very, very important orthodox approach to managing the whole monetary situation. But let's look at what will also be very, very active during the second quarter, the political season, where we expect primaries for the presidential election to take shape. How would that impact the whole market space? This month of April and month of May, very critical in terms of primaries for the presidential, gubernatorial, National Assembly, and of course, State Assembly elections.
I think by the time we get into May, when the primaries will be held, you'll see an increase in money in circulation, in the level of money in circulation, because if you don't see an increase in terms of volume, you're going to see an increase in velocity. Of course, either increase in volume or increase in velocity, or both will have pressures on inflationary rates or consumer prices. So we should expect that will push up inflation rates and as a result of increase in consumption or demand. So I think we're going to see a situation where inflation will increase further beyond the pressure that have been brought about as a result of increase in fuel prices and diesel prices. And again, you're also going to see a situation where preference of consumers will shift from investment to largely consumption. At periods of elections, there are so many jesters, the politicians turn into jesters, and then they create some level of emotional relief to the citizens. So it creates opportunity for people to laugh, and at that point, you hardly see a lot of liquidity going into the capital market. Remember also that month of April to June, the benefit season ends around April and early May. Subsequently, there is no major income expectation from investment in equity instruments. So at such point, there is a shift away from equity instruments, particularly for those who are looking for benefits or returns, immediate returns. So a lot, I want to believe that the equities market will remain largely quiet in the second quarter of this year. We should expect higher rate of inflation in the second quarter of this year. We should expect increase in money in circulation, increase in velocity of circulation, and that will, like I said, will flush into the inflation rate.
Yeah, quite interesting that politicians will give emotional relief, but of course, a quiet equities market activity. Finally, 30 seconds, any word for investors? What should they, how should they approach the market in second quarter?
Investors should continue to look for value instruments with underlying intrinsic values. When you invest in a value instrument, you hardly go wrong. Even if you don't make an immediate capital gain or immediate profit, the one thing you are sure is that the value of your asset will not diminish, or even if it does, it will recover. And that in the medium to long run, your return will certainly outpace the return of those who are invested in highly speculative instruments.
All right. Thank you very much, Mr. Johnson Chukwu, for the time, and definitely the second quarter promises to be an interesting one, particularly the impact of the political season as the market unfolds. But it's been nice having you, Mr. Johnson Chukwu, Group Managing Director of Cowry Asset Management, to give us a review of what happened in the first quarter of 2022 and what you should expect in the second quarter of 2022. Thank you once again for the time.
My pleasure.
Thank you. And that'll be all for this edition of the Market Review. If you have questions, comments, or suggestions on the review of what happened in the first quarter of 2022 and definitely what has been said today of what we should look out for in second quarter 2022, please send them to Ottoabasi Abasiekong at ProChange.com. We'll be glad to respond to you. Also, join our website, www.ProChange.com. We give you all the latest news articles, stories, and reports on the capital market. They're well captured for you. You can also engage us via social media platforms displayed on the screen. Don't forget that you need to be informed to make the right investment decisions. Thank you for watching, and keep discussing the financial and capital markets because they create wealth and economic opportunities.